Embedded finance is taking off in B2B. By 2030, non-traditional providers like digital wallets could handle 75% of online consumer payments. To expound on this, we have Leon Sea from EY and Lito Villanueva from Fintech Alliance Philippines. So let's start with Leon. What's driving the shift towards embedded finance and B2B?
The shift toward embedded finance in B2B is driven by the growing demand for seamless financial integration. And as you may know, businesses, especially MSMEs, which make up about, in our case, 99% of the businesses in the Philippines, and that would also contribute around 40% of the total GDP of the country, are really looking for ways to streamline operations and enhance customer experiences through integrated financial services. And if I may add, the embedded finance market in the Philippines is really booming, and it is now projected to grow by as much as 23% annually and hit around 1.62 billion US dollars, with expectations to surpass around 7 billion US dollars by 2029. So you can now see how big the opportunity is insofar as this particular initiative or particular subject matter, because that urgency has only grown post-pandemic.
So instead of directing them to separate financial institutions, the adoption of embedded finance does three things. First, it brings about greater processing efficiencies. Secondly, it enhances the visibility into the creditworthiness of the businesses, as financial services providers can access real-time transactional data and also understanding of the supply chain processes to determine the financial health of the business to aid them in this underwriting process. And also thirdly, helping businesses to improve liquidity, better managing their cash flows, and also optimizing the working capital. So additionally, as cross-border transactions grow, there's rising demand for more seamless real-time payment solutions that can integrate with business activities. This shift in consumer expectations is also a key driver behind the increasing adoption of embedded finance.
This shift is also causing some issues. Can you help us identify the challenges that banks face as non-traditional providers grow in business payments?
So non-traditional providers like fintech players, for example, have the advantage of being agile and unencumbered by legacy systems and policies. So as such, they can scale up their technology infrastructure quickly and design solutions tailored to B2B needs. So in contrast, banks may not be able to match this fast pace of innovation needed for these businesses. And non-traditional providers can also leverage advanced digital technology, which provides access to real-time behavioral and transactional data. So with AI and predictive analytics coming in, such data can allow the provider to forecast payment behavior, for example, better customer segmentation, and also driving some of these personalized marketing campaigns with higher conversion rates. So to remain competitive, banks and non-traditional providers should look at forming strategic partnerships to allow them to extend their reach, as well as also deliver more relevant financing solutions and being able to meet the evolving expectations of the B2B customers.
Well, in the Philippines alone, over 335 fintech players or firms operate, with more than a third focused on payments. So giants like GCash, valued at around over 5 billion US dollars, and because we only have two unicorns in the Philippines, GCash and Maya, and GCash being the biggest insofar as valuation is concerned within the ASEAN region. These are backed by major investors and quickly scaling with innovative solutions. Now, traditional banks struggle with outdated legacy systems, making it harder to adapt quickly. And for you to stay competitive, they must embrace open banking or open finance, upgrade tech infrastructure, and enable API-driven innovations. So with RCBC, we are meeting this challenge head-on through strategic partnerships.
So taking everything that you've just mentioned into consideration, what's your forecast? How will embedded finance evolve in B2B payments by, let's say, 2030?
Yeah, by 2030, embedded finance in B2B will be defined by three things: experience, efficiency, and intelligence. So its evolution will be accelerated by advancements in automation, AI, and also the integration of a wider range of financial product and service offerings into the business platforms. The future also lies in creating a unified platform that supports both trade and non-trade payments. For example, from customer payments to supplier transactions and employee reimbursements all in one place. So such integration will not only streamline payments, but also unlock deeper value across, for example, expense management, lending, as well as working capital financing, all in real time. To bring in some of the service providers like your insurance firms and corporate credit card issuers can also help to further enrich these platforms and offering real-time visibility into how expenses can be better managed. So more importantly, the behavioral and transactional data that's generated through these embedded systems can be harnessed to develop more targeted, data-driven type of marketing strategies that drives better customer engagement as well also conversion rates. So while adoption is growing across many sectors, some type of businesses are leading the way, with regards to this embedded finance. For example, e-commerce and digital marketplaces, which can provide more holistic, integrated digital experiences using these embedded financial tools. Or smaller, younger businesses, such as SMEs, that may not necessarily meet the traditional bank lending criteria, but can generate real-time transactional data and provide visibility into their working capital.
So using my crystal ball right now, so I think by 2030, as you mentioned, embedded finance in B2B payments will be fully integrated into business platforms driven by AI-powered personalization, open finance ecosystems, and seamless interoperability. Now, financial services will no longer be standalone. They'll be embedded directly into workflows across industries. So you could now see the interconnectedness of all these players in the industry. And leading this evolution are retail and e-commerce, where embedded payments enhance customer experience and boost access for underserved users. Now, if you are to look at logistics and supply chain sectors, we are also advancing rapidly in that particular sector. No? In fact, we had a collaborative workshop with this particular sector that is being supported by the government's Department of Trade and Industry. And with this, this particular sector is now supported by tech adoption and foreign investments in a market expected to hit a staggering 25.4 billion US dollars by 2031. Now, SMEs are also embracing digital tools like, say, e-supply chain management, highlighting a growing shift toward integrated tech-enabled financial solutions across the B2B landscape.
Thank you so much for sharing your insights and for joining us today, Liyun and Lito.
Thank you.
Thank you so much for having me.
Once again, those were Liyun Sea, a ASEAN banking and capital markets leader at EY, and Lito Villanueva, founding chairman of Fintech Alliance Philippines. For more news, visit asianbankingandfinance.net.